For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170 plus global markets matter. Visit ibkr.com/performance.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome into the Chit Chat Stocks podcast, a podcast to help you find your next great investment. My name is Brett Schaefer, and I'm joined by my co-host Ryan Henderson for another Ryan Research episode. Last time, listeners seem to have enjoyed our coverage of a fallen angel or a fallen compounder, aka Copart. So we are continuing this theme for the next episode, today's episode, and we are covering Costar Group. Ryan may have the figures, but I think it's down at least 50% from highs. Ryan will have the exact figures for the listeners as we get into the episode. But before we begin, let's remind listeners, we always do on our individual episodes without any guest, to give us a 5-star review on Spotify or Apple Podcast and join the chat community in the Emerging Moats newsletter. The link will be in the show notes, even though it's called something different than the podcast. Just think of it as also the Chit Chat Stocks podcast community. We talk all things investing and the podcast within the chat. You can ask me or Ryan a question at any time, and we're active every day on there. So let's get to Costar Group. Ryan, take us through how this business was formed and who is the co-founder and CEO, I believe still the CEO today, Andy Florence.
Yeah, and he's pretty much the sole founder, although there was an early investor that helped him as well. But the Costar Group, people seem to love fallen angels, as they should. It's a good chance to buy stocks, buy quality businesses when they're down a lot. Costar Group, I think, could be put into that camp. We're going to dissect it today and see whether or not this will be a continuously falling angel or not. But yeah, it's down almost 70% from its highs. Let's talk about the business. Costar Group was founded in 86 really, by a guy named Andy Florence. I'll spend a little bit of time on Andy because he's sort of a controversial figure and he's still the CEO today. And even though he doesn't have massive voting power, it seems he's built a board around him that likes him, respects him. He has a very strong track record of expanding data businesses, acquiring and expanding them, and building a moat around his different data sets and marketplaces that he sells. So he is sort of the ultimate decision maker at this company. So to go through his history a bit, Andy Florence, I believe, was raised in New York City. His father was apparently a prominent architect, but apparently his father wasn't that present in his life. And when his parents split at the age of 11, he spent a little bit of time homeless, actually. I find that was kind of a bizarre fact that I found, but he mentioned that, I believe, in his commencement speech at VCU that he did recently. And a year later, so after he's homeless, a year later, I believe, at the age of 12, he was able to get into a music school in New York City. And that school was one of the few in the area at the time that had a computer. Because this is like, I think, late 70s, maybe early 80s. And that's where he learned to write code. So he was, I guess, a programmer, developer from a young age. And those computer skills eventually paved the way for him to go to Princeton. Fun little factoid here. While at Princeton, he studied economics, and his lab partner was none other than Jeff Bezos. Quite the successful little duo they both became.
That is funny. Yeah. Well, two pretty successful groups. What's CoStar's market cap today? Probably a little lower than Amazon's, but $13 billion. That's some good value. Created for shareholders. There we go.
Yeah, it was much higher. It was actually, I think, from IPO, because both companies, both Bezos and Andy Florence started companies. I guess Andy started what would become CoStar a little earlier, but they started their own businesses, IPO'd them in the late 90s, and they actually had nearly identical stock performance up until sort of the AWS IPO, and then Amazon basically took off, and CoStar has not performed nearly as well. So, uh, anyways, nonetheless, one of Andy's sort of early fascinations was digitizing public records. I don't know if I'd call it a fascination, but he saw the opportunity that was there. Keep in mind, this was early to mid 1980s, so a lot of important records were still kept only by physical copies, or maybe they were in certain places on the internet, but they were siloed to whatever
Well,
this.
before the internet, Ryan.
Sorry, maybe there was digital databases, but it was strictly for, say,
Yeah.
kept to an individual business, that kind of thing.
Yeah, we're
So,
still in the early ages of the home computer at that point. That's still like a luxury item for people.
right. Florence saw the opportunity here. I mean, this was, I assume, I don't know this era that well, but I assume there was a wave of digitizing public records that quickly became like strong businesses for everyone. And he was right there to capture it. He actually did this with SEC data for public companies early on. I believe he sold one of his early digital data businesses as well. I can't remember um, what the price was for, but he, while studying economics at Princeton, he thought, okay, everyone pays attention to stocks, bonds, all the data around them. S&P Global was already a big business. I don't think Bloomberg was quite, I don't think it was even started yet, but there was data businesses around stocks and bonds. There really wasn't for real estate, at least commercial real estate. So he saw the opportunity here, and out of his dorm room in 1986, he founded a company that would, it really wasn't a company at the time. He founded an idea that he turned into Realty Information Group. This would later become CoStar. And all he did here was him and some employees that he hired, he would pour through city and county filings as well as public deeds and try to find information about big commercial buildings. This was just things like building measurements, zoning classifications, the ages of the building, when they were built, any plot maps that he could find. And he'd manually port those records over onto a digital database. And so he would literally just go to the county municipal buildings, go through these filings, and port them over by hand. He would also call up business owners or building owners and ask them for information about their leases. So, what's the price per square foot? What's the current lease expiration? How many tenants do you have? Occupancy rate, stuff like that. And some of these building owners were just willing to give it away because, like maybe it leads to a new tenant or whatever. He amassed this pretty big, sizable data set, and it was very valuable to the right customer, and he built sort of a centralized repository for it. In the early days, he didn't have the whole country's records. Obviously, he kind of had to go city by city, but starting in New York City, obviously a very valuable place to begin. So this quickly became a pretty sought after data set. The business was officially formed in 1987, so a year after he started going to work on amassing this. And then I'm kind of going to breeze through some of the other early history, but in the early 90s, they started selling software licenses. I guess it was like they also sold, I think, paper license. There was like a physical element to the business, but then in like 93, he said, we're just sticking straight to software. This is where we're going to head. This is what people will want in the future. And real estate brokers, as well as prospective tenants, were buying this. Like, it's a super valuable data set for them. And one of the things they did early on that became sort of integral to their success now is they encouraged a give to get model where brokerages could trade their private listing data in for access to CoStar, to that shared system. So you give us all your data about all the listings you have, and we'll let you see everyone else's, basically. That little trick created a powerful network effect that essentially of super valuable user-generated data, and it ends up becoming one of the biggest factors of their moat today and kind of insulates them from competition. The company officially went public in 1998, and they have since acquired maybe 100 other businesses, maybe not that much, but they were sort of a serial acquirer of data services and marketplaces. And even with the recent 70% drawdown, shares since 1998 have compounded at just over 13% per year. So still really solid returns, not quite 100 bagger, but you maybe would have had 100 bagger a year and a half ago, or you could have been close to that. So that's kind of the journey to where they're at. We'll go through some of the acquisitions and more of the business model, but any questions there, Brett?
I don't think so. The internet is saying 23 acquisitions, but it might not be going all the way back to the late 80s. But yeah, quite an acquisitive company. We'll get into things there. We'll talk about homes.com. I know many listeners, if they're familiar with the stock, we'll be talking about that, as well as apartments.com and kind of the general strategy today. But we need to look at, Ryan, what this, I don't even know exactly what industry to call it. Is it just commercial real estate data? Something like that. Also, they're getting into residential real estate, so not just commercial. But a lot of people, listeners, will be familiar with either the listing market if they're not out of the US, Zillow, maybe you have your local one out there, you have the Redfins, you have the homes.com, as we'll talk about. But many are not going to be interacting with what CoStar operates, which is their own website as well as Loopnet, correct? Is the core one there? So what does this industry look like? How do they compete? And why are they considered, I'm asking your own question here, the Bloomberg of real estate?
Yeah. Now, for all intents and purposes, CoStar operates essentially a monopoly in the market for commercial real estate data. Now, they've diversified the business a lot, as Brett mentioned, so they're not necessarily a monopoly in all their sort of subsectors, but commercial real estate specifically, they are the only true end-to-end data provider. There are some alternatives in sort of specialized niches, specialized regions, but yeah, as far as holistic end-to-end platform, no one comes close to CoStar. There was a point when LoopNet was a formidable competitor, but we'll talk about it here in a second. They acquired them, so there goes probably their biggest competitor. I think people probably already understand the value proposition a bit in having a database for commercial real estate, but let's go through sort of an example customer. I think prototypical customer that's easy to imagine is the real estate broker, the commercial real estate broker. So there's also asset managers and investors and lenders that subscribe, but it's easiest to kind of put yourself in the shoes of a broker or an agent. So let's say you're a commercial real estate agent and you work with a restaurant operator or a franchisee, and that franchisee wants to expand into Seattle, Washington. They want to add a new location somewhere in Seattle. What you would do, so they'd come to you, tell you they want to expand, go find, the best deal for them. What you would do is get an understanding of what they need. So, how big of a kitchen do you need? Do you need a drive-through? What's your budget? All that stuff. What's your parking space going to be like? Do you want to have parking? And then you're going to go on to CoStar. You're going to punch in all those filters and parameters, and you're going to see it's like a map-based interface, similar to Zillow for people that aren't familiar. You're going to see all the lots that are available that meet those specific parameters. When you click on a property You're also going to see all the physical specs and any of the attributes of a building. You're going to see the lease and occupancy data. You're going to see who are the other current tenants, any sort of market analytics. So, for example, you want to put a Jimmy John's at the bottom of a building. You might want to know how many people are in the building, how many, what other businesses are there, what's the occupancy rate, stuff like that. You can also run comps, so you can see like what's the price per square foot, lease rate compared to other buildings in the area, that kind of stuff. So it's a holistic database for commercial real estate. It's exactly what it sounds like. Once you find a property, you would then contact the owner or the landlord, property manager, whatever, and you make an offer. Think about that process, and now think about trying to do it without CoStar. You can't. You could, maybe if you know the area really well, and off the top of your mind as an agent, you know every single place that's available for lease at the moment, you might be able to do it. But the reality is you will not be taken seriously as a broker if you don't have a CoStar subscription. You're just lacking the resources that other brokers have. Now, typically, maybe not typically, but oftentimes, these agents or these brokers work for a big parent company like CBRE or JLL, Cushman and Wakefield, I think is one. And those parent companies will just pay for the licenses for their brokers. So that's why it tends to be considered sort of the Bloomberg of real estate. The average subscription license probably costs in the ballpark of $1,000 a month. And you can get, volume discounts. You can get discounts if you only need a single market or whatever. But CBRE, for example, will get these massive, probably 1,000-seat deals with CoStar, where they're getting a volume discount and then they give it to their agents that usually I think are considered like independent contractors. But nonetheless, I don't know how a broker would operate without a CoStar subscription. I just don't think it's really possible. To illustrate this point, let's look back. If you go back to the great financial crisis and look at the financial results of the business at that time, I've got a revenue chart pulled up here for the last 20 years. In 2009, when the real estate world was falling apart and 100,000 agents dropped their National Association of Realtor memberships. So the world was collapsing. CoStar's revenue dropped by 1%. It was a 1% contraction when the world around them and their customers, businesses were falling apart. It is probably the last expense you would get rid of before you shut down operations. If you have an office, you'd go home. You'd keep your CoStar subscription. You have to. You drop every other expense, but you can't drop the CoStar subscription. So I think it goes to kind of show how valuable it is to these core customers. You research your investments, you analyze markets, you manage risk, but have you researched your broker? For the past 3 years, Interactive Brokers' individual clients averaged an annual return of 24.3% compared to 23.1% on the S&P 500. IBKR's lower trading costs, competitive rates, efficient execution, and access to 170 plus global markets help investors keep more of what they earn and put more capital to work. Over time, the broker you choose matters. Interactive Brokers, member SIPC. If you care about performance, find out why the best informed investors choose Interactive Brokers at ibkr.com/performance. Again, visit ibkr.com/performance.
Have you been able to pick up if over, say, within the core business, if a lot of the growth has been new seats or pricing power, or are they adding on new features? Like, how exactly has the revenue evolved, or is it really just they raise prices on subscriptions and they have a pretty steady customer base?
Pricing power has to make up for the majority of it. If you're referring to just the commercial side, and for
Yes.
what it's worth, the business is actually like truly quite diverse now. So commercial real estate broadly between Loopnet and Costar, I think only accounts for around 45% of Costar's revenue. So there is like multifamily and residential is becoming a bigger piece. But in that commercial real estate industry, I don't have the specific numbers in terms of contract value versus new customer count. But my guess is that customer count has just grown essentially at the same rate as the industry. If the number of real agents and brokers grows by 2% a year, that's, I'm guessing, around what the customer count would grow at, maybe a little faster. And then the rest is made up of, pricing increases.
Okay, let's talk first about how the business evolved, but I want to mention, the nice looking chart there going back 20 years of data. Our friends at fiscal.ai, another great asset, similar to CoStar for the investment world. I won't say a disruptor to Bloomberg, but people can make that connection. It's another great data point for individuals. And if you're listening to this, you should use our link, fiscal.ia/chitchat. Check it out. Check out a free trial, and you can get 15% off any paid plan. Okay. Costar Group. Ryan, let's keep moving here. You mentioned the diversification. You mentioned the acquisitions. How has the business evolved? And kind of for the podcast listeners, try to create a holistic story of how they've it's really the last 15 years or so post Great Financial Crisis, how they've evolved into a more diversified player.
Yeah, like I mentioned a little bit ago, commercial real estate now accounts for only about 45% of CoStar's revenue. It's probably a higher chunk of the earnings, but in terms of revenue, it's no longer the vast majority. I think investors, when they hear CoStar, they still think commercial real estate data, and probably because it accounts for the majority of earnings, but also the flagship product, Costar, is the commercial real estate platform. So there's also the name association there. But they've done a really good job diversifying revenue through acquisition over the last 15 years, like Brett said. They really are a serial acquirer. And in the early days, the acquisitions were all pretty much supplemental to the existing business. It was all about commercial real estate. Maybe it was analytics. Maybe there was a research angle. Maybe really early days, it was about geographic expansion. So right after their IPO in 1998, they bought Jameson Research, which was the leading provider of industrial real estate information in Atlanta and the Dallas-Fort Worth area. That same year, they bought a company called Lease Trends for Midwest and Florida expansion. They bought comps.com to expand into San Diego, Napier Realty Advisors to expand into Portland. The list goes on and on. They just had these one after another geographic data expansions that they would integrate into CoStar, and they built out this massive national database that was unlike anything else at the time. However, they've gone from geographic expansion in the early days to more, I guess, industry expansion as well. So I'll go through a couple of the landmark deals that they've had, and then we can carve out some time to talk about homes.com individually. But 2011, they acquired Loopnet. This was the same industry. It's commercial real estate, but it's probably maybe the most meaningful acquisition ever. Second, behind apartments.com, which we can talk about in a second. But Loopnet was CoStar's essentially biggest competitor around this time. They had actually spent essentially 10 years prior to this in court fighting each other. CoStar was suing them constantly for data infringement. But in 2011, they offered, I think it was $860 million in cash and stock. The deal was accepted by Loopnet. And Loopnet, for those that it's a somewhat similar business and that they're in the same industry, but it's a different model. So a lot of the listings were user generated on Loopnet. So the real estate agent or owner would put in all the listing information, and it was like this sort of open source platform where customers could come, and then the agents or the property owners would pay to have like greater visibility on their property. But it skewed more like casual users as opposed to professional customers. There were certainly some professionals, but if I were just wanting to start up my own restaurant or whatever and I didn't have an agent, I could look up available inventory near me on Google, and you might find the Loopnet link, and it's going to have all these user generated listings that you can pour through. Anyways, after 10 years of fighting in the courtroom, they acquired Loopnet, and it was $860 million in cash and stock, which is about half of CoStar's market cap at the time. And as a part of the deal, CoStar was required by the FTC to spin off Loopnet's stake in Xceligent, which was, I guess, the closest competitor to CoStar. Kind of ironically, they spun off their stake of Xceligent as the FTC required, and then 5 years later, CoStar sued them again for data infringement, and Xceligent essentially went bankrupt. So they might have been better off not having this required divestiture, but
so they kind of have the lawsuit tendencies of a Disney or Nintendo. If anyone's threatening what they've built, they're going to go after them and go after them hard.
Yeah, it's more like Getty Images, almost like
yeah.
And people hate them for this. Like for some reason, I read a whole bunch of articles online that seem kind of like hit pieces against CoStar, and they're like, they've sued every small startup for data infringement. And it's like, yeah, they won all those cases because they were just stealing data. Like, it's not, they make it sound like they're destroying these smaller competitors, but if they're just stealing data, it doesn't. Yeah. Anyway, they've been very litigious throughout their history. 2014, they acquired apartments.com for $585 million in cash. That was essentially 7 times revenue or 21 times EBITDA at the time. So not a terrible face multiple, but a premium. And investors were not ecstatic about it. It wasn't their core business. Apartments.com sold subscriptions to property managers and multifamily landlords for essentially same thing sort of as LoopNet, where it's like you get premium property placement when people are looking for apartments. So essentially an sort of an ad model, but also subscription. But it was a more competitive industry, and management at the time, Andy Florence, laid out that they're going to spend aggressively on apartments.com after the acquisition to grow the business. And you might remember all those commercials with Jeff Goldblum where he's talking
still
about
out there sometimes.
Yeah. Well, now I am
homes.com.
I would be curious how much money CoStar has paid to Jeff Goldblum over the last decade. Yes, now it's homes.com, but originally it was apartments.com. Following the acquisition, they initially integrated some of CoStar's proprietary data onto apartments.com platform. They began taking more photos of properties. So I'll talk about that here in a second, that sort of leg of the business model. And they acquired a bunch of competing sites, Apartment Finder, ForRent.com, and they spent hundreds of millions on marketing for those Goldblum ads. Fast forward to today, and that business now does more than $1 billion in revenue, up from $86 million at the time of the acquisition. And importantly, I think this is a nice piece to remember. It's not as cyclical. Apartment rent doesn't go through the same ups and downs of commercial or residential real estate. So the multifamily revenue has been quite consistent and stable for them, which has been this was a massive success. And I think potentially set a bad precedent, because CoStar learned we can acquire these fantastic domains like apartments.com. We can throw tons and tons of money at marketing. We can integrate our own data to really juice up the platform. We can use our direct sales team, and we can just save any business, basically. It is kind of, I think, maybe the feeling the company had. So, and in this case, it totally worked. This is the biggest business that they have now on a revenue line. So, that acquisition was great. 2021, fast forward 8 years, and they acquired Homes.com for 156 million, which doesn't sound like a whole lot and it shouldn't be so controversial, but we'll dive into this more in a second. They have employed a similar post-acquisition strategy where they are just pouring as much money as they can into expanding the Homes.com brand to essentially compete with Zillow.
They're going head to head, and I think it's caused Zillow. I don't know how much they've talked about this. Zillow is now investing very aggressively into Zillow Rentals, which I think it's just they're both on the same platform. It's not two separate websites or two separate applications. But you're going head to head with someone who probably has much more significant mind share among individuals in the United States. Not talking commercial real estate, but individual, buying or renting a place to live.
Yeah. And we're going to spend some more time on Homes.com in a second, but I'll just mention some of the other businesses that CoStar owns. They own Biz Buy Sell. I don't know if you know this platform.
I've been on there a couple of times. You can look at, would I like to buy this for $50,000? This terrible business sounds enticing.
Yeah, it's basically a small business marketplace for, if you've set up a 10 vending machine operation, you want to sell that business, some other entrepreneur can come along and buy it from you.
Can't say it works that well. It's not the best working website. Do you agree? Have you been on there?
I've been on there. There was like a 2-month time where I was like, maybe I should buy this vending machine operation. But yeah, it's sort of subscale, I guess you could say. So it's just a very different market. Domain Group is another company they own. ForRent.com. They bought Matterport, I think, last year for $1.6 billion.
That's where that company went.
Yep.
Talk about a fallen angel. That's a pandemic fallen angel right there.
Yeah. Land.com is one that they own, and basically a bunch of other data aggregators or marketplaces. You can go onto Wikipedia and look through the list. I think Brett mentioned it's 20-something acquisitions. I would guess it's probably closer to 50 if you include all the early ones where it was expanding just the commercial real estate data services. And
I think that list only went back to 2011, but still acquisition heavy. And they're not afraid to pay up. I mean, Matterport, $1.6 billion. I know that was a fairly-ish successful business on its own. And we may not have, actually, I think you're about to talk about it right now, so I don't want to steal your thunder. Why? All right. We're going to talk about Homes.com after, but we need to talk competitive advantages. I like to say emerging moats, but that's kind of the branding I like to use. Costar Group itself. Clearly, the stock has done well over the long term. I looked up even revenue per share. It's up. It's compounding the double digits for a long, long time with phenomenal gross profits. They've chosen, how much to invest or not. But clearly, people are giving them money. They can't go anywhere else. There's pricing power there. Where, in your mind, is the competitive advantage? And is it expanding, contracting? Where are the risks to the moat? Take us through all the sort of competitive landscape for CoStar Group. We can't cover every brand, but for the relevant brands today.
Yeah, so I believe CoStar now has produced or generated more than double-digit revenue growth year over year for more than 50 consecutive quarters. So, yes, to kind of illustrate the growth point there, yes, very consistent growth. The short answer for why is this such a good business at its core is proprietary data. And there's a number of ways that they get that data. And specifically, there are some ways that they get data that competitors can't. So I'll go through a few of them. For starters, CoStar employs thousands of researchers. Researchers might be sort of a generous term here, whose sole job is to collect data. This is literally call centers where people are reaching out all day to property managers, buyers, sellers, etc., asking for deal prices, lease terms, all that data. They're going out and they're collecting it. So, of course, someone else can do that, but for a startup, it's hard to afford 2,000 field researchers. The other part here, and this is a big barrier to entry, and it's kind of the crux of a lot of their data infringement cases, is they have a huge team of photographers and videographers. This is actually, I think, really important to focus on. If you're listening to this podcast, you're wondering, what's CoStar's moat? This is kind of where it stems from. This and the next point I'm going to talk about. If a CoStar customer subscribes to the highest tier, I think it's the highest tier, but whichever one includes the photography package, CoStar will go out and create a bunch of media for your property. So that includes high resolution images, drone videos, 3D mapping with Matterport now. They even own a bunch of airplanes that help them get footage of things like skyscrapers. So they'll get video footage. CoStar will hire, I assume they maybe even have pilots on staff to fly around skyscrapers, get video footage. So the customers pay for it. The customers pay for CoStar to send their media team out there for media, for CoStar to keep the media rights. So the CoStar owns the photos. They own the videos. Basically, customers are paying for CoStar to expand their moat, essentially. And that's where Loopnet maybe tried to scrape images in 2006 off of CoStar. They tried to copy and paste them over to their own platform. Or maybe they had there was a recent example of Crexy, who was sort of an upstart trying to compete with them, that I think had click farms, essentially, likely in Southeast Asia, that would go in to the CoStar platform. They would crop the images so it didn't look exactly like it, and then they'd post them to their own platform. And CoStar picked up on it, sued them, won in probably a short time frame. They've done this a number of times, and it always seems to be the crux of their litigation complaints. So that is one thing. There's a lot of capital required to have your own team of photographers and videographers and airplanes to get all that rich media footage, which if you're an agent, you want that footage. Like, you want that content, not just the stats, right? You want to be able to look at the condition of a building. The other part, and I assume this accounts for the majority of the data on their platform, is CoStar's customers are effectively forced to upload their listings and lease comps to CoStar so other industry players can see them. This has built a massive network effect. So let's say I finish a deal, I get that restaurant operator into a space in Seattle. I'm then essentially required to upload the data. Now Starbucks notably doesn't let their agents do this, but most businesses or agents have to publish all their listing data.
What's Starbucks' specific beef? They just
assume they just don't want competitors seeing what Starbucks pays or why they're going to certain places. I don't know, but I assume it's built into the contracts with some of these bigger agencies like CBRE or Cushman & Wakefield, where it's like, we'll give you volume or bigger discounts if you upload your listing data. It's still that give to get model. And you think about it, like, now, if you're a broker, you need to be where all the listing data is. And all the listing data is uploaded by the users on CoStar. It's a huge network effect. It's not that dissimilar to a social media platform. Do you want to be on Instagram because that's where everyone's posting their content, right? So, yes, I think that is a powerful element as well. And then they also scrape like public records, and they've got partnerships with brokerage feeds, but those aren't really proprietary sources. So it's not as meaningful in my opinion. The thing that I think is sort of beautiful about this business is it's kind of AI proof. When you think about the industry for stock market data, for example, I'll relate this to fiscal, shameless plug. A lot of business data is in the public domain. So financial statements, earnings calls, stock prices, that kind of stuff. There are elements of that data aggregation process that can be automated. So there's kind of the risk now, thanks to modern machine learning and AI models, that you can automate some of those processes. You can't automate sending a plane up and capturing video footage. That rich media content, it really can't be replicated just because we're in an AI world. So I think it's a lot more AI proof than some of the other data businesses that have been struggling lately. Like I think FactSet is one of the businesses that have struggled. There's a lot of other data companies that haven't been as resilient as Costar. So they are, I think it's not too surprising when you think about how much they spend to get their data, why they have been so active suing companies. If I'm spending $50 million a year to fly planes to get footage and some other platform is hiring a click farm to steal it, you can imagine why they'd want to rigorously protect that, and they do.
Yeah, and you can just say, well, someone else can go fly the plane, right? The one question I would have here, and I think it can help position how maybe you're thinking about it and how the listeners can think about the company in the entire real estate space. Who do you think has the wider moat, Zillow or Costar Group?
Costar, not close. Not close.
Explain.
Zillow, the moat, like consumer traffic is not a moat, in my opinion. Proprietary data is a big moat. It's obviously, there's a lot of value in having 240 million monthly visitors to your Zillow app or whatever. Like, I'm not saying it's bad, but Zillow gets all their data for the most part by buying it. They buy it from a regional MLS or multiple listing service. So that's not proprietary. There's nothing stopping homes.com from going out and getting the same data. They do. That's why when you go to realtor.com, you go to Redfin, you go to Zillow, you'll see a lot of the same properties with all the same images because Zillow doesn't own those images. So on the actual underlying data that they are selling, Zillow really doesn't have a moat. Now, they've built the best wrapper, they've built the prettiest user interface, and they own the customer touch point primarily through the app. But as far as moat goes, CoStar can raise prices at will, and Zillow is like a really well done middleman in a way.
And is there a difference between apartments.com and homes.com? Because with that, maybe I'm trying to play devil's advocate a little bit, they're encroaching on Zillow's turf. So if more of the revenue comes from that, would that be a shrinking of the moat if they're kind of going, it's a lower quality business that they're trying to, acquire and spend their way into?
Yeah, I think Zillow investing in Zillow rentals is potentially threatening to apartments.com, but I don't know if there's a whole lot of overlap between homes.com and apartments.com, and I'll explain why in a second. But apartments.com, you think about who's the customer for apartments.com. Well, there's the end consumer, me. I'm not really a customer per se, even if I visit apartments.com. But I go and I look for apartments near me, and there's a couple that are spotlighted. Okay, it's the person that owns the apartments or the property manager paying a subscription fee and maybe some boosted advertising fees to get their property in front of me as the end customer. So the customer is the property manager. With residential, like homes.com, the customer is listing agents for houses, which is kind of just a different customer that they're serving. So this is why, let's dive into homes.com. The stock is down almost 70% from highs. entirely because of this Homes.com spending. Maybe you could say it's been the SaaS apocalypse and everything's re-rating, so they've been included with it too, but it's really Homes.com. Since the acquisition, they have been aggressively marketing, probably the most aggressive marketing push of all time for real estate, this Homes.com platform. And they really kicked it off in 2024. That's when the spending, I think they spent the first couple of years making sure all the data was clean and improving the product itself. And then now they've just been on a full-blown marketing blitz. The world of residential real estate data, I just talked about this, it's far more competitive than commercial. If you look at, like, if you are Zillow or you're Redfin and you want to get data about homes in Austin, you've got to go to, I think it's called Unlock MLS, which is just the regional MLS for Austin, managed by the Austin Board of Realtors, and you pay for that data. Again, it's very fragmented, and the data isn't held by any one player like you have with CoStar. So that's the data collection side of things. CoStar, not that different. Homes.com, similar data aggregation methods. The only caveat there being that they acquired Matterport, and Matterport actually has this big repository of 3D spatial data on a bunch of homes. So that might differentiate the platform a little bit. But on the monetization side, that is where they're trying to change everything. So Zillow, the way Zillow makes money for the most part is it's a pay-per-lead model. That just means when a buyer inquires about a home, they say, I want this, I'm interested in this or whatever. Zillow intercepts it and it sells that lead to third-party buyers agents. That is what Homes.com used to do as well. They used to run on this pay-per-lead model, but CoStar threw that playbook away and has been rolling out this your listing, your lead model. And they've been saying this in all their advertisements and stuff like that. And what this means is the listing agent gets 100% of that consumer lead that comes through. So effectively, Homes.com, their customer is the listing agent or the seller's agent of a house. Whereas Zillow essentially gets their revenue primarily from the buyer's agent. So this really is, they're kind of selling to different customers. Both businesses need as much consumer traffic as they can get. But if I'm a listing agent, I can post my property on Homes.com or the MLS or whatever. And whoever comes through, that comes directly to me. And what I'm paying for is premium placement on the map or a sponsored listing if they're scrolling through houses, that kind of stuff. But the big caveat with all of this, and to be clear, I think it's the right choice. I think the monetization model kind of remains to be seen, but they're taking this whole market from a different angle. I think the pay per lead is a little lame, for lack of a better term. That model that Zillow and all the other residential portals have, I think it's not ideal. But in order to win the market, like in order for this to work for CoStar, they have to get consumer traffic to their website. If consumers don't come to Homes.com, there's no incentive for a listing agent to keep having a membership and paying for premium placement. So that is why CoStar has embarked on, Andy Florence called this literally word for word. He said the biggest marketing campaign in real estate history. They have committed to spending essentially more than $1 billion annually. I think it's changed a little bit since, but more than $1 billion annually on Homes.com marketing. If you look at the sales and marketing expenses for Costar Group, it has just ballooned in recent years. We've got a chart from Fiscal here. So
scary looking chart, I will say. Yeah, but it's I guess good looking. It looks, what was the compound annual growth rate here? 20%. We're going to the same year as the revenue. Since 2005, obviously an acceleration in recent years up to 1.56 billion. And I have your initial total revenue from 2005 is growing at 17% a year. So they've really accelerated that as a higher percentage of revenue, mainly for homes.com, correct?
Yeah. And you can also see the jump in 2015 when they bought apartments.com. Marketing doubled year over year, and it worked out in that case. But now, since 2022, marketing expenses have gone from 680 million to 1.6 billion. So, yeah, quite the jump. Surprise, surprise, investors hate this. In 2024, CoStar generated negative free cash flow for the first time in their history. The issue I think that investors are having with all this isn't necessarily just the sheer spend. It's that it's hard to tell whether it's working. So the credit I would give to CoStar is that they've forced themselves into the conversation. They've managed to be homes.com is something that people talk about. Maybe not talk about, but when you talk about like residential portals, it's up there. They are sort of a legitimate top 3 player. When they bought homes.com in 2021, it was an obscure legacy portal, essentially just a domain. They had less than 3% traffic share. Now they are a legitimate top 3 player. They've surpassed realtor.com and I think Redfin in monthly visitors, but they peaked, I believe. The data they reported when they were sort of on a big marketing push was 100 million unique visitors. Zillow, for comparison, averages like 240, 250 million unique monthly visitors. So there's still a second player here. And keep in mind, Zillow's not spending the way that CoStar is for homes.com. So maybe some of this is not going to be recurring traffic. The other issue that throws a wrench in all of this is that the residential real estate market is struggling in general. It just like rates are up. Homes are pretty much as unaffordable as they've ever been, which is muted
Activity's
demand.
down. Yeah.
Yeah. So there's going to be, I guess, less. So they're investing into this weak market, and it's sort of an uphill battle. I think the question investors have to ask is, can they win the residential market over Zillow? Do you think that in 5 years, they could have more monthly visitors on homes.com than Zillow gets right now? And then the second question is, if they can't, if they figure out that they are not going to be able to have success and displace Zillow, will they stop spending so aggressively? That's, I think, probably the 2 most important questions right now.
Yeah, it's fascinating because I think I can sum it up. For myself, I'm going to Zillow if I'm going to look for something. And even if I'm a renter right now, I'm not going to apartments.com. Now, that could be just the regions I'm in, but that's where I think they struggle here long term. And maybe they benefited from a decade of Zillow being mismanaged. And who knows, maybe Zillow will be mismanaged for another decade. That's kind of the only things I have to add at this point.
I would be curious, and I bet this data's out there, how much of Zillow's traffic comes from mobile app versus website visits? Because if they own, if 150 million of their 240 million are visiting through mobile app, it's going to be really hard to win those customers over. Like, I think homes.com is a great domain, but if all this traffic is mobile, I don't know how much it helps them.
Yeah, that's fair. Well, I think this means, we have had a few questions here about the Zillow connection competitive threat. I think that means you have to do them for your next fallen angel because the stock is down 83% from highs, Ryan. Trades at 2.7 times sales. Maybe I'll convince you to do it.
I don't know about that one. That one's CoStar has a hit. I don't love the residential business to begin with because, like I said, there isn't a big data and advantage for any one business. But at least CoStar has these other businesses that are really successful.
Okay, let's close things out. Valuation, activist involvement, kind of where the stock sits at today. And we'll finish things out with always, what is your interest in the company? So how are you valuing it, and what was the activist campaign?
So yeah, obviously the homes.com spending has resulted in profitability being essentially nowhere near where people thought it would be. And people don't know what it's going to look like either. So all the DCFs have been sort of thrown out the window from investors. This has, anytime you have a business drop 70%, there's not any one CEO with total voting power. It's attracted some activist investors. The two most notable would be Third Point, which is Dan Loeb, and D.E. Shaw. The focus from both investors, more or less, was the drain on operating income around homes.com. Loeb actually mounted a pretty big proxy campaign and pushed for, getting rid of some of the spending. And he cited some concerning numbers about the expense increases versus the incremental revenue growth. But he has sort of walked away from this proxy campaign. The result of all this activist involvement is that CoStar, they have not completely ceased residential spending. They're not saying we're done with homes.com, we're going to kill this. But they have committed to slashing their annual residential spending by more than $300 million this year, and following that up with annual $100 million reductions after. So they've revised their 2030 guidance to $2.3 billion in adjusted EBITDA by 2030. $2.3 billion. Let's take a look at how that compares to their 2022 Investor Day targets. So CoStar, which has historically, they've crushed every long-term Investor Day guidance they've ever issued. They've destroyed the numbers. They've done really well. But this latest guidance seems like they're going to have to just ignore that they ever put it out there. At their 2022 Investor Day, they guided for $5 billion in 2027 revenue. So keep in mind, this will be revenue, not this year, but next year. $5 billion in revenue, 40% adjusted EBITDA margins. Their adjusted EBITDA margin is actually fairly useful here. It converts pretty well to free cash flow, and stock-based comp isn't too bad. So for reference, like in 2019, which was sort of their last real peak year, they reported 36% adjusted EBITDA margins, and GAAP operating margins were 26%. So big difference, but we're not talking about like positive versus negative here. It's generally the right direction. It's looking like CoStar is going to be more around $4 billion in revenue and maybe $1 billion in adjusted EBITDA. So a far cry from what they issued in their 2022 Investor Day targets. Right now, CoStar has an enterprise value of $12.8 billion. If you take their numbers at face value and you assume that their recent guidance that they just issued, the 35% adjusted EBITDA margins is achievable. Let's say that equates to somewhere like 25% operating margins, but I think should be fair. They would then be trading at around just under 8 times their 2030 operating income, closer to less than 6 times their adjusted EBITDA for 2030. Those multiples are in line with what I usually like. I want less than 10 times 5-year out earnings. And they have recently started really pouring money into the buyback. My big thing here, and I think this is probably what every investor thinks, is what happens with homes.com. Why, as a consumer, me, like if I were looking at a home, why would I go to homes.com instead of Zillow? Right now, the only thing I can think about is homes.com has more 3D spatial mapping because they acquired Matterport. So Zillow doesn't have that on everyone. And I think actually Matterport retracted a lot of the 3D spatial mapping that they were selling to Zillow, and now it's only on Homes.com. That might be an advantage, but is that enough to win me over? I don't know. So I still like it here, honestly. I think this works out. And if Homes.com does beat Zillow, like if they can have more users or visitors in 5 years, this would be a home run. But if they don't, the biggest worry is that they're not going to be able to recognize it. Management won't, and they're not going to be able to say we were wrong. Let's step away from this. Let's reduce spending. That, I think, is the biggest concern.
Yeah, you look at 8 times 2030 operating income. It's not guaranteed to get there. You look at the operating income today, it's close to zero because of this marketing spend, right? At least I'm looking at the fiscal AI chart here. GAAP operating margin is close to zero. Yeah. What do you I'm trying to say is it sounds like it's a watch list stock for you.
Yeah, probably, but honestly, maybe it's a starter position. I do like it here, and I think the thing I like the most is that Andy Florence has built and expanded data businesses for 30 years, and he's 40 years almost, and he's done an exceptional job with it. And I think he'll be able to tell whether or not the progress is real. Now, I don't know whether or not he'd be able to admit defeat, but I think if you get enough pressure from shareholders and your stock keeps dropping for a sustained period of time, eventually most executives will be able to admit defeat. So I see this with like Meta a lot, and a lot of these businesses where they take big swings, margins compress, and then everyone extrapolates out that margins are going to stay compressed. Like no one thinks margins can get back to where they were. Management can always stop. Like if the pressure gets too big, they can rein in the spending. And I think usually management teams are willing to after a long enough time period. We've seen that with Meta. Meta's done it before. Amazon started flexing their margins. I mean,
Yeah. Until 2026, then everyone's spent everything on big tech to zero. But I get the point you're making here. You kind of get gut check and you go, it's probably 90%. Well, I think it's a low probability you lose money here over a 5 to 10 year period. Only problem is like how much upside do you have if they kind of blow their wad on this homes.com thing and it doesn't work out? Maybe you don't do that well. But I feel like, again, I haven't researched this company closely. Low percentage chance you lose money, probably good fat middle percent chance that you get adequate, maybe solid multi-bagger returns over a decade. And then the upside is you probably get a 10 bagger if things go right. They buy back a lot of stock. They start gushing cash flow, things of that nature.
yeah. When I think about it, like, and I'm sure this is what management thinks about, what does it take to get consumers to look at homes.com versus Zillow? I mean, Zillow doesn't have any secret sauce. They just have a really, really well-built user experience. So get the user experience right, get the user interface right. If you can create some sort of proprietary data advantage, like with the Matterport, maybe that's helpful. You probably have to do a little more than that realistically to win customers over. But I don't think it's impossible to see homes.com displace Zillow as sort of the leading residential portal.
Yeah, I think I agree with you. It's going to be hard to do, especially because, as I mentioned before, Zillow has been mismanaged, I think, and is still the leader. All right, that's going to do it. We're well over an hour here, Ryan. have you made your choice for next time? Is it going to be Reddit? We might have an interview on Reddit. I don't know. So maybe we'd have to revise that if we ever do. Have you made the choice? If not, I guess we can leave it as a mystery for the next few weeks.
Whatever I end up doing, I'm sticking with the Fallen Angels theme. I don't know exactly what it will be, but you can just count on it being yet another fallen angel.
All right. Thank you, everyone, for listening. Thank you to our sponsors, Interactive Brokers and Fiscal AI. As a reminder, we're not financial advisors. Anything we say on the show is not formal advice or recommendation. Ryan and I are any podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, once again, and we'll see you next time.